Well, welcome everyone. We are so delighted to have some of our very, very favorite friends and guests with us, Roberta Hudy and Jill Banner. Loved our relationship with iPlanGroup over the years. There are so few custodians that really understand and simplify for our students exactly what they need to do to invest with their IRAs, and so we're delighted to have them. So, a couple little housekeeping things before we go. If you're new to this, this is a part of a long-standing asset protection webinar series that we've continued to do for I don't know almost a decade now. Scott Estel was on earlier, and he'll be on here in a couple weeks again. We'll be talking about protecting intellectual property here in 2 weeks. We'll be talking about patents, copyrights, trademarks. Hope a lot of people don't understand the value of their intellectual property. We hope you pay attention to that. Screen's a little messed up, but Mike Koval will be talking about investing strategies for any market. We've got an expert on nonprofit corporations coming up and selecting the best tax structure for your business. So, an incredible lineup, and almost every week between now all the way through September and maybe even into October. So, great webinar series if you're not paying attention. And then all of these, again, if you're new to us, if you've been around, you know that all of these webinars are posted on YouTube. Usually it takes us about 24 hours. So if you miss part of this recording tonight, it will be available tomorrow on our YouTube channel. What you would do is simply go to YouTube and then type in Protect Wealth Academy. That's our channel. You would hit subscribe, and then you'd have access to all the webinars that we've taught.
Hey, Don, a little caveat to throw in there too. A lot of
Yeah.
people aren't getting notifications. So once you subscribe, if you want to see notifications of new uploads that we do each week, make sure and hit the little bell icon. So once you subscribe to us, there's a bell icon that will give you notifications for every new video we upload. So that is something, that little caveat, if you want to receive updates.
I didn't even know that. Thank you. I appreciate that.
Of course.
All right. And then we've got our 3-day summit. Wow, we've got an incredible lineup. And Roberta, we don't have your picture on here, but you ought to be in there. I don't know.
I know. Jill's usually there too,
Well,
Don.
prettier than anybody else that's up there, the rest of us guys. Bill Danko will be there, co-author of The Millionaire Next Door. Scott Estel, former senior trial attorney from the IRS. Mike and Stacy Koval. Gene probably won't be in Orlando, but will be at some of the others. Kwame, I'm not sure whether Kwame will be there. Clint certainly will be, but we've got an incredible lineup. Go to when you register, you'll get a summit agenda, and that summit agenda is fairly robust. There's a lot of content that we'll cover in 3 days. We're at the Omni when we get to Orlando. It's a 5-star, 5-diamond hotel that is absolutely stunning. It's an amazing hotel, and we've got a $129 room rate, a discounted Disney, extortion fee, but it is what it is. We've shopped around even now, and we can't find a better price on Priceline than what they've given us. And so, great rates. Our discount ended yesterday. Our group rate, they'd reserved us a block of rooms. It ended, but they're promising as long as there is availability and you identify yourself as a student of the 3-day summit, they'll honor that group rate. It's just that the availability is running out. So book that as soon as you can. Again, the agenda is posted. And then before we talk anything, there's always a legal disclaimer. We can't give legal advice. We can't give tax advice. We can teach practical, general strategies. We just, how this applies to you and your situation, I don't know. So that's, we invite you to take advantage if, maybe sit down and talk to Roberta or Jill and or call their office. In fact, we'll make an offer for you to be able to talk to one of them as the webinar goes on. So encourage you to take advantage of that. So with that, oh my gosh, Jill, it's such an honor to have you. And Roberta, longstanding friends. We knew Jill way back when she was just a student of ours. And it's been a delightful, I don't know, over a decade. And it's been fun to watch her company grow. It's been fun to watch the integrity that they have and how well they've taken care of our students. So we're excited for the topic. And so how do we create tax-free income? Jill, Roberta, we're going to turn the time over to you. Thank you for being here very much.
Thank you, Don.
Thanks, Don. Well, this is exciting. Thank you so much for having Jill and iPlanGroup on your platform. It's exciting. I remember doing this. Gosh, I've lost track of time. Was it this year? I think it was back in maybe March or April. And Jill joined us. So thank you, Jill, for being here. So many people ask about you and also many times say, I want to run this by Jill, for people that have met her and know her. So we're very excited to be here to have this conversation. And of course, my role is to educate. And so I want to do that. Some people here on our call this evening have maybe seen us before. Maybe you're a self-directed IRA investor. You can always put in the chat. It's a great way for me to just kind of look at the audience a little bit. So if you want to type in where you're from, if you're a current client, and what I mean by from is what state that you're in. If you're a current client, you can say that too. If you are a self-directed IRA investor, certainly don't want to bore you with anything that we're going to talk about. But there are some distinct differences between iPlanGroup and some other IRA providers out there. So we definitely want to cover that. And I'll take about 15, 20 minutes. I'll move through it fairly quickly. And Jill, I'll probably reach out to you on some of these slides as we go through it, just to clarify and really add your personal experience to what we're talking about tonight. And it is tax-free income. It's a hot topic this year. We've been talking a lot about it. And with the proposed tax legislation that's coming up, we definitely agree with Protect Wealth that certain tax burdens, if you will, are optional, right? Why are they optional? Well, they're optional because if you have the education to actually mitigate, plan ahead, things like probate, right? There's ways to stay out of that. So IRAs are also, self-directed IRAs are a great tool for you to mitigate taxes and to also have some asset protection. Not every self-directed IRA is perfect for not every investment is perfect for a self-directed IRA, but it's important that you determine which one is good for a self-directed IRA, especially a Roth if you qualify. And if you do not, I can explain how to get into a Roth IRA if you make too much money. So we'll go into some of those details. Again, I'm Roberta Hudy with iPlanGroup, and Jill Banner joins us this evening, our CEO and founder of iPlanGroup. We're located in Westlake, Ohio, and that is just outside of Cleveland, so Northeast Ohio. We do have a national reach with our clients, and our role is we are a self-directed IRA administrator with a custodial responsibility for our clients that are using their IRAs, retirement dollars, like Roth, traditional, small business plans, 401ks, to invest into alternative investments. And that includes real estate. We've got a lot of people investing in physical property, but we also have a lot of people doing private loans and private entities. So lots of options with the self-directed IRA. Not going to talk too much about all those different options, but for those of you that are familiar, you understand that it's pretty limitless. With that being said, we are regulated, and we're regulated by the Department of Labor as well as the IRS. And so to reiterate Don's introduction, we are definitely not here for tax, legal, investment advice. We don't endorse any investment or recommend any investment per se. Our role is to review self-directed IRA investments for our clients for feasibility, not performance. So very important that you retain those advisors and of course run with those winners that are winning in the space that you want to win in terms of alternative investments. So again, educational purposes only, no tax legal investment advice. We do encourage you to ask questions this evening, and you can do that in the Q&A. That would be perfect, and I'll take a look at those as we go through the presentation and towards the end. Again, I don't want to take too much time, but I want to cover the basics for those of you that may be new to self-directed IRAs. I actually talk to people every single week, and some of them are very accomplished investors. They're doing things like a couple $100,000 in a private fund, and they don't know that they can use a self-directed IRA for that investment. So even if you're experienced, some of these concepts may be new. We'll cover a little bit about that, and of course, focusing on Roth tonight and qualifying and why should you really consider doing that now. I've covered who we are, what we do. Education is a big part of it. That's why we're here tonight. We're very passionate about that. Jill has led not only our company, but I think she really is a great example by just what she does, right? Because she is very good at investing. And I think I can say that, Jill. Very accomplished. Anything that you name, she's probably invested in it. And that passion, and I think that desire for her as a self-directed IRA investor, she was frustrated with a larger custodian that she was a client with, and just basically said, I think I can do it better. And she did. And we are in our 9th year and growing consistently every year. So part of education is helping our clients do better, right? We really want to see our clients succeed, not by our providing all the opportunities, if you will, but that education. How can you really be empowered with a self-directed IRA and do it within those guidelines? Built by investors for investors, like I just said, talked about Jill. I'm going to show you a little bit, another picture of us, not that you need to see it, but just to see a little bit more detail about who we are, our role, and what we do with iPlanGroup. What is distinctly different, as I mentioned, with iPlanGroup and other providers out there, is this boutique firm built by investors for investors. We have that mindset. It's your mindset. It's the same one. We understand the urgency of investments. We understand the urgency of getting things done, and it costs you money if those funds do not get to the table. So we have that mindset internally. It comes through in everything that we do. And we do answer the phone. We have a personal client experience and a very simplified fee structure. And that's definitely something we can talk about one-on-one. I know a lot of people like our structure, especially for very active investors, because we do not have transaction fees. And of course, investors that are growing those accounts exponentially, they like us too, because the fees are capped. So it's a very, very nice program that we could talk about, again, one-on-one in more detail. And a lot of things are on our website as well. So I've talked about Jill a little bit. Jill, just right here, if you just want to tell us a little bit more about yourself before I go in, anything you'd like to share, maybe specifically about Roth IRAs, what excites you about that, and a little bit about your experience.
Sure. Roth IRAs are such an amazing tool. I've got a story of a recent deal that I've done in my Roth IRA, but let's save that till the end once we do some education on what a Roth IRA is and why it's beneficial, and then I'll explain that structure. But I have been investing in real estate, private entities, startup companies. I think I've done almost everything except for I haven't touched storage units or assisted living. So those are two classes I haven't personally done, but we have clients that do them. So done a couple mobile home parks and the like of those. So.
Excellent, excellent. Well, that's great. And I think we have some questions coming in already, and I definitely will be looking at those and answering those. So thanks, Jill. I do brag about her a lot. And like I said, we're not always on a presentation together. So definitely type those questions in as we move forward. So me, I've already talked about it. Just like to kind of give a high level about my background in, small business ownership and investing and doing small business plans. So not anything that I want to really expound on, except the fact that I understand both sides of that table. So when you're thinking about tax mitigation, you're thinking about retirement, and also experiencing a lot of ups and downs in the market. And the things that I say, life happens while you're making other plans. So I've experienced that. And I think I really particularly like to educate, because I know that if you don't know something, you can't execute on it. So I think that's what makes me passionate about getting the word out, regardless of your level of experience. In this conversation, I just want to clarify self-directed. It is a marketing term. A lot of times we hear about it. It's not that self-directed IRA that maybe you have with a Schwab or a Vanguard, where they ask your risk tolerance and you pick something and you put all your money in it and your advisor runs with it. It is where you actually title the asset inside of the IRA, and it's not titled in your name personally. In terms of the contribution limits, distribution rules, and all the tax benefits, exactly the same as an IRA that you hold right now. So self-directed, it's really in that titling, it's upfront. Keep that in mind. It's super important to have an account open, funded, so you're ready to make offers. You're in that place of readiness. So if you're out there looking, make sure that you have one funded so you can get this titling right, just like you see on the screen here. If you do acquire an asset, or you have current real estate or other investments you want to throw into an IRA, doesn't work that way. So titling is definitely important. We do not have minimums at iPlanGroup. So keep that in mind to get yourself in a place of readiness for those investments. If I could describe a Roth IRA or the power of a self-directed IRA, I think this slide is probably the one that would sum it up the best. Even at the age of 40, now some people out there think that that's a super old age, and of course I do not, but in this example, starting balance of $100,000 inside of a Roth IRA, and let's say for purposes of the conversation, you've got a pretty stable return of 10%. You're not making any contributions in this example, but over this 25-year period, you are able to take out what we call taxation, the power of zero, right? So the marginal tax rate, now this might be a little older slide, right? Some of you out there may have a much higher tax rate, and small business owners, you might have a much lower tax rate. But if you take that net effective tax rate out in this example, not making contributions, look at the savings, taxable savings that you have by putting that investment inside of a Roth IRA. That is the power of a Roth. So instead of losing that taxable, savings, your Roth IRA would grow over to over $1 million in this example. So any comments there, Jill? Have you experienced that yourself?
Yeah, I love the power of the Roth IRA. I do have all types of accounts. I have traditional and Roth, and I typically use my Roth IRA for the higher rates of return. For example, if I'm going to get a steady 6% on a hard money loan, I'll probably do that in my traditional IRA. But if I'm investing in a startup that has huge potential, I'll probably do that in my Roth IRA, or maybe a different asset class like a mobile home park. I'll put that in my Roth IRA because I don't want to pay taxes. I want to do the high risk, high return stuff in my Roth IRA.
Mm-hmm. Very powerful. So why self-directed IRAs? It's really about flexibility as well. I mean, just like Jill is commenting, there's all different types of investments. Some are going to be just beneficial, right? By putting it in the IRA, getting that deferment or that, tax-free growth that we're talking about. Diversification. Again, I talked with a couple advisors actually this week, financial advisors that are actually very excited about the education that we're doing, because they understand that their clients want to do real estate and they don't necessarily want to move their whole portfolio and move away from their professional services. They just want to get a better yield or do something that they can put on autopilot a little bit after they do that due diligence up front. So it's about investing in what you know and taking those returns. So maybe it's at 10%, maybe in something that you're comfortable with, it's 30%. Maybe it's, I don't know, 15, 20, whatever it is. So this tool, the self-directed IRA, gives you the ability to experience that type of return and get that tax benefit. So it is unlimited growth, by the way. So there is no limitation, at least this year, as far as we know, no limitation on the growth, the actual growth or yield that you can return in a self-directed IRA. And at iPlanGroup, if you are comfortable with stocks, bonds, mutual funds, ETFs, you can do that through TD Ameritrade with us. Now, I just want to clarify, if you start with us and you open the account and you want to do the stocks over at TD, then you want to do real estate or you want to do a private loan, you're good to go. If you currently have an account with TD, that's great. But if you want to use your IRA funds and have that flexibility, diversification with a single account, you want to start with iPlanGroup. So just want to clarify that. There's actually 7 different accounts that you can self-direct. So it's not just the traditional and the Roth that we're talking about mostly tonight. I highlighted, it's a little bit, not the contrast I was looking for, but I highlighted 2 accounts here because the Roth IRA is going to give you that tax-free income. So that's on the exit after 59 and a half, when you're eligible to take the money out without penalty, provided that you have a 5-year seasoning, and we'll touch on that. You're able to take money out of your Roth IRA with 0 tax. So it's not going to be added to your net ordinary income. So that's why I often say the tax-free bucket. Now, the health savings account, I think, is an overlooked account by a lot of investors, and maybe just because they don't know it can be self-directed, I don't know, but it's powerful. So it kind of has that traditional IRA characteristic as well as the Roth IRA. And what I mean by that is your contribution on the health savings account is a tax deduction. So you get the deferral. And then as that grows, self-directed if you choose, then on the way out, the exit, it is a tax-free withdrawal when you pay for the qualified medical expense. And that could be for right now expenses or long-term care. So very powerful account. Just want to point that out. The other specialty account, Coverdell Education Savings Account, we do have a recent event on that. So if you want to check out our video on the website, you can do that as well. And then, of course, small business plans, including the solo 401k. Again, that's growing in popularity for a lot of reasons, and mainly if you qualify, a much higher contribution limit, in some cases up to $64,500 annually. So you can put a Roth component on there as well. So again, when we're talking about self-directed IRAs, here's what we're talking about. We're talking about when do you pay taxes, seed, or when you've grown that money over time. Even if net effective tax rates stayed exactly the same, which we know they do not, if you have 25% of $100,000, that's much lower than 25% of, let's say, $1 million in your IRA at retirement. So the Roth IRA is that tool, that path to that tax-free growth. And you just want to be thinking about the strategy for that tax-free income, and also using multiple accounts. A lot of our clients do that because they need the deferral. They like that feature, but they also like this idea of the tax-free bucket. So very important to look at all accounts and what you qualify for. We often talk about the team, and what we really mean by that is retaining those advisors. So your CPAs, tax advisors, real estate attorneys, professionals that are educating in real estate or syndications, whatever that might be. You really want to strategize. Who are those people that are helping you move forward? I could go on and on about that because I work with a lot of great educators in our education and some women's groups out there. I'm just going to mention it. Invest Her. If you haven't checked it out, please do, ladies. It's amazing. So you can just Google that. You'll find one near you. But not a recommendation, just saying it's available, education. But I also find that team so important because they can dig deeper and give you that advice on tax legislation. So we've seen the Secure Act. Gosh, that was back at was that the beginning of 2020? I forget the first version. I think it was the end of 19, beginning of 2020. We had the CARES Act, right? So the moratorium on
Evictions?
landlords. Moratorium on evictions. Thank you. It's been a long day. And how that's coming to an end. So we see some things there, but also the CARES Act had a provision in there on foreclosures, right? So pushing that down the road. That is also coming to an expiration. So there's some things moving there. So things to know about if you're a real estate investor and looking at opportunity. But also popular in the news over the past probably 4 to 6 weeks was Mr. Peter Thiel about how much is an IRA? And yes, it's $5 billion. Not going to focus on that right now, except the fact that I like to point out that a Roth IRA is not just for the wealthy, right? So while he grew his IRA, Roth IRA, exponentially by his expertise and comfort zone, right? Started with founding PayPal, selling to eBay, and then into Facebook. So there's a whole story there. It's really pretty exciting. But the same tool is available to you. So, 5 billion, that's a big number, but, maybe $100,000 of tax-free income or $1 million of tax-free income would not only change your life, but maybe change the legacy that you're leaving. So you want to make sure that you're learning about these things, digging in. We do some education with tax advisors on occasion, financial advisors, real estate attorneys, so they can speak to these things. Of course, we cannot. Just want you to be sure that you are digging deep, take a look forward, find out how these bills may be affecting you. So what we're seeing, and these, again, observations, Jill, and I know you can speak to this as well. We definitely saw this. I think we saw it last year on 2020, Roth conversions increasing with our clients.
Absolutely. And they still continue to convert. I think they're worried about what's coming up for next year. So a lot of clients are converting as we speak.
Yeah. So we're seeing that, and we're also seeing multiple IRAs. We'd like to see a lot more of that, by the way. So if you are a client, it's important to kind of go through and see which accounts are available to you. Contributions are powerful. So there's definitely ways with the health savings account that I mentioned. If you have a high deductible healthcare plan, that's the only qualification really that you need to establish that account. So we're seeing more of that. And of course, the solo 401ks, because they've got some flexibility, higher contribution limits. But what I mean by flexibility is if you are doing different real estate investments, or you have that high risk, high return, you want to do that with your Roth and your solo 401k. But let's say there's, a prohibited transaction, maybe not even intentional, right? But sometimes those things you're not aware. They're more forgiving accounts in an audit situation. It doesn't blow up your whole IRA. We've got some events coming up. You can check that out as well. iPlanGroup.com events page. On solo 401ks, we're going to be digging into that. We're also seeing cryptocurrency, lots more questions on that. We'll be covering some of that. The passive private lending. I don't think there's really anything truly passive per se, but I think Jill would agree with that as well. Lots of due diligence up front. But I think passive also means, you've got some people that are doing the heavy lifting and you're providing the funds, right? So, and better yield. People are definitely looking for better yield. I put some pitfalls in here that I'm just seeing, not necessarily with our clients per se, but hearing from people at events and educators, really stressing the due diligence. Sometimes we see that. We stress that a lot with our clients. We also like to walk you through what you qualify for, doing your due diligence around the account that you're setting up and making sure that your strategy is feasible, super important. We do have a lot of people also that talk about just kind of the lack of service. So definitely we'd love for you to try us out, even if you have multiple IRAs, or you're with a current provider and you have a new investment you want to do, great way to try us out. But I think that can definitely hang people up and just not getting that service that they need. And I think also knowing that tax rate at retirement, not just now. So I think those are things to keep in mind. I don't know if Jill has any extra tidbits on that prior to our questions, but probably agree. All right. And then funding a self-directed IRA, just basically 3 ways to do this. Another basic, but super important to keep in mind. Contribution, transfer. So you can go in kind from a traditional to traditional, or Roth to Roth. That's what we call the in-kind transfer. Great way to fund a self-directed IRA. And also the rollover from an employer-sponsored plan. And in most cases, that's a former employer plan former. So you can do a direct rollover into the self-directed IRA, non-taxable event. And you can, of course, use a combination of all 3. In some cases, we do see plan documents for employer-sponsored plans. If you are still employed, you can ask about an in-service rollover, in-service direct rollover, or in-service direct rollover. That could be a possibility, but most of the cases we don't see that. Sometimes we'll see it, especially for people age 55 and over, there may be a provision. So most pension, TSP, all those different plans out there, small business plans, yes, those can be rolled over as well. And you can keep those in kind, or you can fund a traditional IRA with us and invest. So the Roth IRA, here's what you have to have a Roth IRA. You've got to have earned income. So a lot of people say, well, I'd like to have one of these for my teenager. And yep, you can do that if there's earned income. So W-2, 1099, as defined by the IRS, earned income, you're qualified. 5-year seasoning rule does apply with a Roth IRA. Even if you open a Roth IRA at age 57, you still have to have that account opened and funded from that date that you open and fund. You have to have that for 5 years before you can withdraw from the contribution and the growth tax-free. So it's a 5-year seasoning rule. So you would have to wait 5 years. I believe I got that right. 5 years after you open and fund. I can tell it's late in the day, Jill. You can do my math. Let's say 55, 5 years at age 60, you can take it out. So it is an after-tax contribution on your Roth IRA. So it's not tax deductible, but you get that tax-free withdrawal after age 59 and a half when you qualify to take that out without penalty, and you've got that 5-year seasoning accomplished. So 0 tax. There is a spousal contribution that is still in effect. I checked with the CPA on that to make sure I was up to date. And what that means is if you are working, so you have earned income and your spouse does not, your spouse would also be able to open and establish a Roth IRA and fund it. So potentially doubling that annual contribution for the household. So great way to get started with the Roth IRA. So the question is, do you make too much money? There is a modified adjusted gross income limit for a Roth IRA. And if you make too much money, you cannot have a Roth IRA, can't open and fund it. So single under 140,000 in earning, you would not be able to open that account and fund it. Married filing jointly, 208,000, and these are the MAGI limits for 2021. However, the Roth conversion. So this is one of the reasons we're seeing this increase this year, because in the proposed tax legislation that's coming up, and again, keyword proposed, they are looking to possibly eliminate the Roth conversion. So this is why 2021 is the time to really think about this. What is the net effective tax rate that potentially I could have at retirement? So you want to be looking at all income sources, including distributions from IRAs, interest income, business income, all those things that land on your tax return. So what does a Roth conversion look like? In this example, let's say you have a traditional IRA, 100,000, and you go ahead and open it self-directed, and you fund it with that transfer in kind, 100,000, and you want to convert. In this example, 50,000. You can do it incrementally. You can do the 100,000 at once. It's up to you, but it is a taxable event. So that $50,000 in this example would be added to your net ordinary income in the year that you do the conversion. So if you do that this year, you make $100,000 in income, you do a Roth conversion of $50,000. Now your net effective tax rate is going to be based on the $150,000. So it's a tax hit, but a lot of people are doing the calculation down the road and looking at the returns that they expect and would rather take this hit now. So this is what is looking to be possibly eliminated. So we're really glad you're here. It's a great message to share with your friends and family. And for those of you that do not have Roth IRAs, great time to just get started, get in the game, and see how things play out as we all watch and wait, right? So I think I've explained why now. I think I've explained how we convert. The conversion can be done in-house here at iPlanGroup. It's really $50 fee to do that conversion per conversion. I think that's important to keep in mind. We do have some clients that are doing conversions prior to establishing their self-directed IRA, and then they just bring it over and establish the Roth. Inherited IRAs, if they are traditional, and Jill, you might be able to speak a little bit more on this, they are not convertible to Roth. But if it is an inherited Roth, you're good to go. But I believe in most of the education things that I've looked at, I don't believe those are convertible. But qualified funds, there's mega Roth concepts out there. Again, we'll be talking more about that coming up in the solo 401ks, but they're just great ways to get that tax-free bucket filled up for yourself. So I see some questions coming in, and I am going to address these. And that is what I wanted to cover. And I think I did it pretty quickly. So we're just past 9 o'clock, Jill. So it's time to dig in. And I am going to take a look at the questions. I didn't look while I was talking. It's a little easier. So I did get one question from Joan, and she said, I'm not familiar with the self-directed IRA. And so hopefully, Joan, that you did hear, I'm not sure when you jumped in, but basically I'll repeat it. Self-directed IRA is just a term. It's an industry term. It's just like an IRA that you hold right now, like a Roth or traditional. Contribution limits, exactly the same. Distribution rules and tax benefits, all the same. The difference is you move a portion of that account or an entire account over to, for example, iPlanGroup, and we have that unique custodial responsibility where we allow you to invest in real estate. So that's a little more clunky than an ETF, but that is what a self-directed IRA is. You take control, it's your money, and you do the due diligence around the investment, and you get to invest in what you'd like. And I think someone else said thank you. So we did get that answered. I understand I understand a person can only do one Roth conversion per year. Can both a husband and wife do a separate conversion in the same year, even if filing a joint return? I'm going to let Jill answer that first.
Of course you are. Yes. Technically that's a CPA question. I believe that's possible, but you definitely want to check with your CPA on the joint return, whether you both can do the conversion in the same year. You both should be able to. I mean, it's separate tax IDs. It's not the same, even though you're filing a joint return.
Yep. And I'll just comment that it is totally agree, tax question. And I am not familiar with limitations on how many, but I think how you file, that's a great question. So you want to be sure. Jill, why high risk, high return for Roth and not traditional?
Yeah, great question. I probably should have said instead of high risk, high return, mostly high return. So if I'm going to invest $100,000 and I'm going to make a $30,000 return, and mostly I do this because why wouldn't I do all of it in my Roth IRA and not have a traditional? Well, I don't want to, I just I analyze each year on what my tax bracket's going to be, and I convert what I can because I don't want to bump myself into a higher tax bracket. So if I'm short on funds and I have 100,000 in my Roth and 100,000 in my traditional, and there's an investment that'll give me possibly 30% returns and another one that will give me a guaranteed 8, I'll do the higher return, the potential higher return in my Roth IRA, because that means at the end of the day, I'll pay less taxes in the long run. So not necessarily high risk in my Roth, but when I suspect I'll get higher returns, I'll put that in my Roth. And mostly it's a capacity issue. I have both, and I haven't converted everything to a Roth yet.
Great, thanks.
Mm-hmm.
I like that. Can you do a contribution and rollover in the same year? And the answer is yes, you can. You can do a combination. Good question. If I haven't filed my 2020 taxes, can I still contribute to 2020 IRA? Depends on the extension, I would imagine, right?
I think that's passed though. COVID did have an extension, and that's passed. Although there might be check with your CPA.
Yeah,
I believe it's over now. But let's say it's January 15th of next year. You will be able to make a contribution for 2020. I'm sorry, what year are we in? You'll be able to make a contribution for 2022 as the new year and 2021 as well. Right. So
Right.
there's times of the year where you can make a contribution for both years. Right now, I don't believe is one of them.
That's my answer as well. Scrolling through, folks. Lots of questions, Jill, so hang on.
I got one. Can I open a Roth IRA for children? If yes, what are the limits? If your children have earned income, you can open a Roth IRA for them. My kids are older now and they do work. I mean, I have a 12-year-old and I pay her, she works for one of my companies. And so I pay her 1099, and this will answer another question. So she gets a 1099 for 10 or 11,000. And then I fund her Roth with that 5 or 6,000, whatever the contribution limit is for that year. So yes, they can absolutely do it. You'll want to make sure it's legit. I mean, my daughter really does work for us. I've even had the IRS question that before because she was younger, but she washes the company cars, she does filing, she does things around the office, she cleans the home office, and so you just make sure that you're not paying them too much and it's reasonable and it's actually that you are paying them. But they can open a Roth IRA as well, as long as they've earned income.
Yeah. And I think they're limited to, for example, if your child makes like 5,000 that year, then the contribution can only be 5,000, right?
Correct. Yeah. Mm-hmm.
So, I don't know if you see that question there. It's from Cindy. Does it have to be U.S. income or can you be an ex?
As long as you have a Social Security, this is a good question. And I would actually like to research this because this is more of a question for us and not, well, it could be a CPA too, but I'm not 100% sure of the answer. I know a foreign national, as long as they have a Social Security number and they have earned income, they can open a self-directed IRA. So this one I'd like to double check on. I believe the answer is yes, though, but I'll confirm that.
Okay. And then can you take principal out anytime you want? And I think that's on the Roth IRA. So as long as it's open funded 5 years, you can take the contribution out after that 5-year period.
Yes, even if you're only 42.
Right. Yeah. Would there be and that would be no tax either, right?
No penalty. Correct.
Yeah. Okay, awesome. If I plan, I'm sorry, I'm scrolling down. If I plan to only have passive income from real estate investments at retirement, does it make sense to pay the taxes on the Roth conversion now if I'm in a higher tax bracket? Real estate investments have a great tax benefit from depreciation and show paper losses that lower your taxable income. The money can compound faster if I start with a higher IRA balance to start. Thoughts? Good question.
This is a really great question, and it's not a yes or no. And it's projecting now and then projecting in the future. What will your income be? What will your tax bracket be? So it's almost like this crazy algorithm. What's the right answer? I certainly understand when you do the real estate in your IRA, you're losing depreciation and some of the expenses. And I'll give you an example. I have a property that I purchased. I knew that I was going to dump a ton of money into it. So I did that outside of my IRA because I'm going to have major losses on that property that I'll be able to apply to my income. So I've kept that out. So there are times when self-directed IRA is not the right vehicle for real estate because of the losses that you can take. So it's really takes an in-depth conversation and your whole picture and your whole how many years do you have to retire. It's a real conversation with your CPA.
For sure. Checkbook IRA question. Would it be okay to trust? I don't know if I'm understanding the wording as a legitimate. I think it's saying, would it be a trust as a legitimate entity holding assets, real estate properties, et cetera, instead of LLC in order to avoid annual tax fee? Like in California, $800.
Yes, this is a very great question. And yes, it would work. It would have to be a specific trust. And actually you can work with Don. He's got all the connections and lawyers to help set up the proper trust for that. But that would save your LLC fees in whatever state you're in. It might be a little less asset protection. It'll certainly give you some anonymity if you want. There's other ways to accomplish anonymity in a self-directed IRA. But the answer to your question is yes, it would work. Done properly.
Got to go to that 3-day, right? Because
there's going to be for sure.
Can you transfer a portion of an account, or do you have to transfer the whole account? Portion for sure. Great question. No minimums with us. So it's really about the capital that you need. What is the running theory for the government eliminating Roth conversions? I would think that the government would like this since they get their taxes now versus later. And of course, Jill, we talk about this with some hesitation because we're not advisors. So some of the events that we attend have a lot of great educators. And so they talk about proposed tax legislation. And as investors, we want to know what types of things are on the horizon. So I don't know how you...
Well, this is a great question. I mean, it depends on, if I'm going to if I'm going to be Peter Thiel, they're going to want to eliminate that because I'm going to make a lot of money and they're going to want to keep getting their taxes over and over and over again versus taxes on the seed versus the growth. So the running theory is there's a lot of tax-free stuff going on out there in Roth IRAs, and they want it on both ends. They want it on the coming out and
right.
So.
Well, and I think a little bit of it too is, if you don't have that Roth conversion, then you've got your traditional IRA money, right? You're growing it. And then you've got a required minimum distribution and it's 72. So the government's getting it on the back end. And if
Absolutely.
you're an investor, we want those.
Let's say I grow my Roth to $5 million and then leave that to my children. Traditional, everyone, eventually they'll get their tax on a Roth. They won't get their tax. So.
Yeah. So great question. If I am maxing out on 401k for a year, can I still contribute to Roth IRA for up to max limit of 6,000? So if that's an employer 401k, I think the answer is yes. I think that's
definitely a question for your CPA. All the employer plans, they're all 401ks, but they all have certain plan documents, and within those plan documents, they can kind of have separate rules. But this is definitely a CPA question for you.
Backdoor Roth, if income is too high. So backdoor, Jill, help us with that a little bit, because people say backdoor a lot and then recharacterizations, which are no longer, but backdoor conversion, do you use the same term?
I call it a backdoor, and if you make too much money to qualify to contribute to a Roth IRA, some people will just put money in the traditional, and then they'll convert the traditional in the same year. So they'll make the contribution to the traditional, and then right at the same time do the conversion.
Okay, so just kind of doing it at the same time.
Mm-hmm.
Awesome. Can a person who is laid off in 2020 be able to do a Roth conversion in 2021 from an old employer?
Absolutely. I don't see why not.
Yeah, that's great. I love the thinking. Yes, that's very good. Yep, we can definitely do that. Can a person who was, okay, sorry, I just said that one. Is there an easy way to calculate the tax amount when converting from traditional to Roth? Tax question.
Yeah, sure. Call your CPA. No, but you should be able to figure out what you're currently paying, and then what the additional income will bump that up to or not. And that's definitely a conversation as you're preparing your taxes. Your CPA might say, hey, you can convert 32,000 this year and you'll still pay 22% taxes. But if you convert 33,000, then you'll pay 28% taxes. So you'll make a decision based on what bracket you're in, and you'll do that with your CPA or your attorneys.
I'm retired. Can I put the required minimum distribution of my 401k in my Roth? I've never had that question.
Required minimum distribution wouldn't be really earned income, though. So I don't think so.
Yeah, I don't think so either.
Mm-hmm.
If no W-2, can 1099 from investments be used to fund a Roth? Investment income is different than earned.
Yeah. So I was thinking of when I first read this, I was thinking of 1099, like I have a contractor come and I'm going to 1099 him, but 1099 interest, if that's what it is, wouldn't be earned income. That'd be passive. But if you were an independent contractor and got a 1099, then you can absolutely contribute to your Roth using that earned income.
What about flipping property, not rental? I think the question is, can you flip in an IRA? And the answer is yes. There are some things to be aware of in terms of business activity and how the IRS views your IRA, whether it's business activity or growing for retirement. Don't have certainly time to answer those details, but that would be, I think.
Yeah, let me give a good example. Wholesaling is when you put something under contract and then you sell the contract. So let's say that you're wholesaling something, you put it under contract for $1,000 and it's $100,000 property, and then you sell the contract to Roberta for 110. So you're going to turn $1,000 that you put as your deposit down, and then you're going to turn that into 10,000. That's a great thing to put into your Roth IRA. Do wholesaling deals in your Roth IRA, but you can also flip rental properties. If you bought a property for 100,000, sell it for 150. You're not going to pay capital gains on that 50,000 if that's in your Roth IRA. So I love flipping properties in a Roth IRA because that gain is never going to be taxed.
Does a conversion now grandfather you in for future amounts converted with this tax proposal? In parentheses, being optimistic. So I have no idea.
Because, well, if you convert now, you're converted, and they can't claw it back as of now. So
yeah.
Go. Mm-hmm.
What is the average rate of return for iPlan real estate? Well, I love that question because we don't do real estate. So clarifying, right, Jill?
Yeah, our clients, we just provide the vehicle for you to invest. So some of our clients are doing 200, 300, 1,400%, and some of our clients are losing their shirts too. So we're just the vehicle. You pick your investment, you do your due diligence, and you execute the transaction. We just help you put it in this bucket or that bucket.
Great. I think we answered the flip. We answered basically on the proposed tax legislation too. We really can't elaborate a lot because it's still kind of unknown. I think there is something out there called the Sunrise Act though too. You can Google, and if you Google Secure Act 2.0, you'll see information on that as well. IRS.gov does have some things to report on that as well. So flipping, we talked about that. And the questions just keep coming. So does a conversion now, oh, we answered that. You can tell I'm really great at scrolling in these questions, right? Can I open Roth? We did that. Are there any circumstances would it make sense to buy an annuity with an IRA for safe bucket money?
You absolutely could buy an annuity with an IRA. You absolutely could. Does it make sense? I don't know. Does it make sense to you? For me, an annuity, it's a personal choice. It's a class of investment. Does real estate make sense? Maybe for some people, maybe not for others. Does annuity make sense? Maybe for some, maybe not for others. But you can certainly do it in a self-directed IRA.
Over 59 and a half, Roth 5-year rule applied to earning, not to contributions. Am I right? I don't know if I get the question. So over 59 and a half, the Roth 5-year rule, does that apply to earning and not to contributions? I don't understand the question. So I don't know. So after 59 and a half, if you do not have a Roth IRA and you open one, you still need earned income. So that doesn't change. And you would not be able to make contributions if you made too much money. So the rules apply regardless of your age. So I'm not really sure.
Does one generally need to be an accredited investor to fully utilize a self-directed IRA? They do not need to be an accredited investor. My children have self-directed IRAs. They are not accredited. Accredited investors, some investments might be prohibited if you're not accredited, but anyone accredited or non-accredited can have a self-directed IRA.
Okay. What are the options for 1099 self-employed again? That's really, again, not a question that we recommend on. So,
well, if you 1099, if you're 1099 self-employed. So
yeah, like a contract. I mean, a lot of contractors are 1099, right? Instead of getting a paycheck W-2, 1099 income. So the example, I always think of contractors, the person comes in and has their own business or if I've contributed $6,000 to my 2020 Roth IRA in January and now found out that our income will exceed the maximum income limit, what should we do? Again, tax question, great thing to tell your CPA.
Yeah, you could probably just do a recharacterization. So what they'll do is they'll kind of reverse the transaction, but send the appropriate notices to the IRS and things. You could do that.
Great. Is the 5-year seasoning based on calendar year or date of conversion? And that's date of conversion, 100%. I invest in apartment syndications. Do you work with most syndicators? We don't work with any syndicators. So most of our clients are providing investment documents to us for us to review for feasibility. And if it's feasible, they can hold it in their IRA.
Yes, but some syndicates, if you wanted to invest in that syndicate, you could do that in your self-directed IRA. It's not difficult. Most syndicators are aware of it, and you'll just need a firm like ours to help you do the paperwork for the self-directed piece.
Does it apply to adopted kids paying a child for tax benefits?
Yeah, it wouldn't matter whether they're yours or adopted or anything, as long as the child has earned income. They could have earned income from grandma and put that in their Roth IRA.
Yeah. And then there was a question, you mentioned titling assets. Can you explain the context? So all I was referring to in the titling of an asset in an IRA is that it's actually titled in your IRA, not your name personally. So when you make an offer, it's in the name of the IRA. So with us, it's iPlanGroup, agent for custodian for the benefit of. So FBO, for example, Roberta's IRA, that's how it could be titled, or the account number. You can take out principal regardless of the 5-year rule. The rule only applies to interest. I think that's one too that we can provide one-on-one too, if you want to email us, and we can definitely clarify, because sometimes when we do these live events, like the verbiage will get switched around, and I apologize if we're being confusing on that. But the 5-year rule does apply to principal and earnings. So we got somebody Googling out there. Thank you for helping us on that. And I think that is right.
Basically they're saying that a U.S. citizen can open an IRA if they live and work in the country. This can either be a Roth or traditional, and both of these accounts can be complemented by a 401k if that's the best option for them. So I think the key here is they live and work in the country, but they're a non-U.S. citizen. So what we were going to research then is if you are a U.S. citizen working overseas, I guess if the income's repatriated, it would be earned U.S. income, and you could open a Roth IRA. But we'll check on that and get back to you guys.
Yeah, for sure. And you can always email us. You see the email on the screen too. So any questions you can email there, and also at info@iplangroup.com as well. We can address questions for you. What is the highest tax bracket you would suggest going to when doing a Roth conversion? I have had very, very large I have very, very large standard IRAs and do not need the income from the RMDs. 77, wife is 71, with tax rates possibly going up and possibly restrictions on Roth conversions ending. Should I do it and be taxed more? Do you see that question, Jill?
Yeah, or plan on multiple conversion. What are the top end? We are in the top end of the 24% tax bracket. This is definitely a tax planning strategy question for your CPA. And it's also, we don't know what taxes are going to do in the next 10 years. I mean, I think they're going to go up substantially. So it's kind of, you're hedging your bets, but this is really, that if you meet your CPA twice a year, 4 times a year, whatever, this is definitely a full-on conversation on what are the advantages or disadvantages of doing the conversion now, all of it, portion of it. I can tell you that a lot of our clients think that taxes are on sale right now, and they're doing a lot of heavy conversions right now. So it's a personal choice too. I hate paying taxes. So
yeah, that's not a fun thing. Megan says, hi, Jill. What are the limitations of the types of investments that can be done with a Roth? Either one of us can answer that, but you go ahead.
Hi, Megan. Yeah, you can do any type of self-directed IRA, any type of alternative assets, real estate, private entities, companies, hard money lending, any type of asset class that's not prohibited. There's only a few things that are prohibited, and we didn't really go over those. But those are antiques, some metals, liquor you can't put in an IRA. And then there's some self-dealing. So Megan, you couldn't buy a rental property and move your husband into the rental property because that would be self-dealing. So it's pretty unlimited on what you can invest in. You can, another answer to your question is anything you can do in a traditional IRA, you can also do in a Roth. There are no distinctions.
Good question here. I had to pull my $45,000 from my IRA last year because of COVID. I was told that I could put it back in 3 years with no penalty. Can I do a conversion this year so I don't have to pay any taxes?
So this is a great question, and this is going to be something that we would work closely with you. So if you pulled 45 out, then yes, you can put it back 3 years with no penalty. So let's say you put it back and then converted it, you could do that. But we'd probably want to look at all the circumstances around this to advise properly. But yes, you pulled it out, you can put it back as a traditional and then convert it.
Yeah, that's great. Good question. What's your suggestion for growing a small Roth of 5,000? Jill, you can jump in on that, but I do let people know that we talk about these things on our events too.
Yeah, I probably something. So you only have 5,000. So let's use an example of my children. They have 5,000. Let's say I'm going to do a hard money loan for 100,000 at 12%. I'll do 95% of the loan, 95,000, pull their 5,000 in. Then when the income comes in, 5% goes to them, 95 goes to me. So I'll pull them along with me if they don't have enough. The other thing, you could do a tax lien. You could do maybe possibly a mobile home. Some mobile homes you can buy for about that. Or you could do a wholesale deal. So you could buy gold, you could buy crypto with 5,000. So you can, there's a lot of things you can do with a smaller value account. And that's actually a great topic we should do sometime in a webinar.
Yes, yes. We've talked about it on private lending webinars, but we need to dig more on the small dollar because it is like one of those wash, rinse, repeat type concepts that it's really powerful. So I like that. If you are putting monies in traditional IRAs to save taxes and invest in real estate, can you save even more with KI syndications? Do you see that, Jill?
Yeah, I don't know what KI syndications are.
Sorry, maybe you could email at the email that you see on the screen and we'll answer that. Is there a limit for how much one can roll over from a former employer 401k? If I have 500k and old 401k, can the full amount be rolled over in 1 year? And the answer is yes.
Yes.
All right. I heard self-directed IRA, the IRS are keeping an eye out for self-dealing versus solo 401k. Your thoughts?
This is a great question, and I've heard just the opposite, that the IRS was more targeting. Actually, this is not true. Okay, I heard the self-directed keep an eye out for self-dealing versus solo K. Your thoughts? The solo K does have some benefits if you do some self-dealing in it. You won't blow up your entire solo K. You'll blow up only the asset that you did the self-dealing. So that's a benefit of having a solo K versus a regular traditional or a Roth. And as far as what the IRS is targeting, what I read recently was they were looking more at the people that are doing some checkbook control. But we haven't really seen any major audits from the IRS on our clients in any specific type of vehicle or asset class. So I don't have real world experience in this to give you an answer on what's happening with our clients.
Can I use my Roth IRA money for a down payment of an investment property?
That's such a great question. So yes, you can. So let's say you have 5,000 in your IRA and you want to buy a $50,000 property. You can use it as a down payment and leverage the rest. That's going to cause a few other little things to trigger unrelated debt financed income, but we can walk you through that. But the short answer to that is absolutely, you can leverage your IRA to purchase property.
Excellent. So I have one more question. I just noticed the clock. We are definitely over the hour, and we really, really appreciate all these questions. I think that this is a great case for more questions at the live summits for sure, right? Because there's
let me blow through a few of these though. I have an investment property which has a loan on it. Can I use my Roth IRA to pay off that loan? Well, I need to move the property into trust or LLC to make it rent tax free. I'm wondering how that works. This is a great question from Anonymous. If you already own a rental property or an investment property titled to you personally, you cannot commingle your IRA with your personal funds. So if you already own it, you can't put that in an IRA. If you're gonna purchase a property, you'll have to purchase it in your IRA, but you can't commingle. Can I use a self-directed IRA like a bank loan to help buy a rental property? That's too broad. That's too broad of a question. You can use your self-directed IRA to buy a property, period. You can loan your self-directed IRA to an unrelated third party as well. So that's that one.
Do you see the one on 57,000?
I want to understand this way for you to fund your Roth IRA for up to 55,000. Is this doable?
I think that's a solo.
It might be through the, I was thinking
That's
that
a
would be.
SEP IRA. Yeah, that's a
Oh,
SEP IRA.
SEP. Okay. Yep. You can do SEP
So
IRA.
25% of your income to
Up to
50,
57.
I think it is, 57,000 this last year. Yep.
Great. Thanks, Kendall.
Okay. All right. We want to still go, or are we chopping this off? Can we convert a former K to a Roth retired? You can absolutely do that. K1 tax paper filed for depreciation. If your property, if your IRA invests in real estate and you get a K1, you cannot take that. It's already in the IRA. You won't be able to take depreciation. Okay. Okay.
You guys did awesome. Holy cow, great questions.
That was a lot, right, Kendall? That was awesome.
Just to clarify, so at the very end here, I know we're wrapping up here. So to do a strategy session right now, iPlanGroup.com/strategy is the best way to get a hold of you. And what happens during that strategy session?
Well, we basically set up a time and you get a dedicated 30 minutes with one of us. A lot of times it's me and sometimes it's Jill, but we also have people on our team that can just walk through some things with you. But we just give you that 30 minutes and we go through the qualifications, eligibility for accounts, going over fees, a lot of different things. So we are very thorough because it's important. It's important that you establish a self-directed IRA that you qualify for and you actually can use. We certainly don't want you opening accounts that you don't know what to do with. So we're good at that.
A lot of times, every situation is a little bit unique. So that's when we really get to dive into the details of your specific situation. And then we'll also pull in the experts. We'll call Don and his team if we need something with a trust or an LLC, or if they're going to be partnered or levered, or there's all kinds of just little rabbit holes to go down to on a specific investment. So we definitely go down all those rabbit holes. And there's usually 2 or 3 ways to structure something. And so we'll just talk about the different ways and then you can decide which one's right for you. We just help you with your options.
Cool. Well, thank you so much. Honestly, incredible information. Seriously, Roberta, Jill, thank you so much. It just goes to show over and over, you don't know what you don't know. And that's why we love using iPlan, because you guys are very thorough. And it really is. This is extremely important that you understand what you're doing, because we see it all the time. You make a mistake, self-dealing practices, you go over and mow the lawn at your rental property, whatever it is. That's self-dealing, and people just think I can do whatever I want. Well, that's not the case. You got to have someone like iPlan that can help you with it. So thank you so much, guys. Really appreciate your time tonight. Great questions. Anything you want to say before we wrap up?
A huge thank you.
Yeah, thank you everyone. So hopefully we'll see everyone in Orlando next month.
Absolutely. Well, I hope so too. And if not, we have the October live stream too. So either way, Roberta, Jill, thank you so much for time and great questions, everybody, tonight. I think you guys will have a lot coming your way. So it's iPlanGroup.com/strategy. Roberta, your email's there. If you guys have any questions for us, give us a shout out. Always happy to help. Roberta and Jill, thank you so much for your time tonight.
Thank you. Have a great evening, everybody. Thanks.
Thanks, everyone. Have a great night.